Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, July 6th. U.S. job growth increased more than expected in June as manufacturers stepped up hiring, but steady wage gains pointed to moderate inflation pressures that should keep the Federal Reserve on a path of gradual interest rate increases. The Labor Department reported this morning that non-farm payrolls rose by 213,000 jobs last month, and data for April and May was revised to show 37,000 more jobs created than previously reported. The unemployment rate rose to 4.0% from an 18-year low of 3.8% in June as more people entered the labor force in a sign of confidence in the jobs market. And on that note, let's move on to three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, we know that the SPY made a closing high, all-time closing high of $286.58 on January 26th. Since then, since that beginning of the year, we've had a real wild ride with the SPY moving down 3 times to its 200-day moving average in February, March, and April, but always bouncing up and off of the black line, the 200-day moving average, which at least is a bullish sign. Since the March lows here, we can draw an uptrend line coming under the March lows, the April lows, and even extended up underneath last week's low. So we've got an uptrend going line going here, and we have the channel line above that looks very nice as well. When I captured this chart today, the SPY was trading at $274.86, about $27.48 on the S&P 500 itself. And as you can see, at the moment, it's just above the red line, the 20-day moving average, and above, nicely above, at least for the moment, the green line, the 50-day moving average. Now, the green line, the 50-day moving average, which is an important moving average, comes in now at $272.17. Now, we have nearby price support here at $269. So what with the trend line coming in at about 270 or 2,700 on the S&P 500 itself, and then again the 50-day moving average coming in at 272. We've got plenty of potential support here should the SPY start losing a little of its power in the coming week. However, at the end of the coming week, we will be starting the second quarter earnings season, and that may tell us a lot as to whether the market will go higher or not. Banks will start reporting, financials will start reporting at the end of the coming week. So that should give the S&P some impetus to move higher as long as those financials are coming in with good earnings. So we'll see if the SPY can indeed move higher, if it can get up and start up toward this prior high that came in at about 279, 280. We'll see if it can move back up to that, and hey, maybe even eventually back up to its all-time high at 286. Our next chart here is a chart we do keep track of, and we certainly keep track of it in Toni's Market Club. This is a daily chart of the PowerShares QQQ. As you all know, this is the exchange-traded fund that closely follows our Nasdaq 100 index. It's an important index in the market because the moves are fueled by big growth stocks, the likes of Amazon, Microsoft, Intel, Apple, Google, Facebook, Netflix, that whole group. And as you can see, the SPY sank below last week its 50-day moving average. The QQQ did not. It managed to hit this line and then move back up again off of it without going below its 50-day moving average, and that is a slightly bullish sign here. 50-day is rising. It's coming in now at $170.56. So 169, 170 can provide pretty tough potential support here. When I captured this chart today, the QQQ was coming in at $174.56. And we had an all-time closing high up here on June 17th at 177.60. So it's getting within kissing distance of these highs again. We'll have to see what happens. Could be earnings season drives it a lot higher. Could be it doesn't. We're going to have to find out as we get into the thick of earnings season. Right now, at any rate, the Qs are in an uptrend, the 50-day moving average drawing a nice uptrend line, and we'll have to see in the coming week if the Qs can remain above the 50-day moving average as earnings start to come in. Our final chart for the day is one we haven't looked at before. It's a relatively new ETF. This is a daily chart of the Global S FinTech ETF, symbol FINX. Excuse me, it has 40 holdings, including some of the top ones are Temenos Group, Fidelity National, Fiserv, Wirecard, and PayPal Holdings. Now, it is rallying off price support. It came down like 2 weeks ago. It was rallying up toward its highs at the end of June, and then like all financials, or I should say most all financials, it fell back down again to the rising 50-day moving average at about 25.50. Found support on that rising 50-day moving average, and then bounced up off of it, starting to gain momentum again. The 50-day moving average right now is coming in at $25.70, and FinTech is coming in at $26.67, at the moment trying to get over its 20-day moving average, the red line. If during the coming week the market continues to be positive, and if financials continue to be positive, and again, some of the big companies, some of the big financials will be announcing at the end of this week, it's possible that FINX could continue to move higher. The RSI here is hooked up to the upside. The MACD has come down to the zero line and is now the MACD line, the black line, and the red line, the signal line, are coming together. Perhaps the signal line maybe can get back over the MACD line in a positive manner. That will happen if the FINX can stay above its 50-day moving average. So if, again, the market stays positive in the coming week and so do financials, I may consider adding a few shares of FINX to my portfolio. My protective stop, my initial protective stop, is where it always is. It is a close below the 50-day moving average, which is again coming in at 25.70. So a close below that would get me out. But barring that, I will see if FINX can stay above its 50-day moving average, say like above 26 next week, and even perhaps start to climb higher, maybe on the backs of some good earnings season. So stay tuned for FINX and see what you think of it in the coming week. And now for the coming week's economic reports, but first, please join us this coming Monday, July 9th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. I also give you the whole plan for these potential trades, including the entry price, the protective stop price, and the profit target. And we send out a report every Thursday that tells you exactly how to treat your positions. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, not a problem. The recording is available just a few minutes after the session ends. For more information and to join, go to tonismarketclub.com. And now for the coming week's economic reports. And again, please remember we'll begin second quarter earnings season toward the end of the coming week. On Monday, we don't have much to report economic report-wise, nor on Tuesday. On Wednesday, we have the Producer Price Index and our usual crude inventories. On Thursday, we have the Consumer Price Index, jobless claims, and our usual nat gas inventories. And on Friday, we get consumer sentiment numbers. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next time, keep green on your screen. I'm Toni Turner, and this is the Market Now.